and today is Wednesday. So, ladies and gentlemen, join in. We're going to look at markets. We're going to look at what's happening with the instruments, the most popular ones, and of course, we'll dig in a few economic issues that are out there right now. So yes, stay tuned. Hopefully you'll enjoy this session, and I'll see you in a bit. All right, okay. Hello, everybody. Hi, my name is Darius Anucauskas, and my name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. So, ladies and gentlemen, welcome everybody. Today is Wednesday, and I'm welcoming you to my regular session, the midweek review. And look, I mean, basically, I do my shows on Monday, Wednesday, and Friday. And let me just double check something here very quickly. I mean, there's like popping up notifications here everywhere, and Anyway, so ladies and gentlemen, like I said, yes, so welcome you to my midweek review, and basically the next show will be on Friday, so tune in to that one as well. Now, look, before we jump into anything, and before we start jumping into charts and other stuff, look, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I can see there, Paul here. Hey, I'm late by 24 hours. No, I'm not late. I'm on schedule. Because I do my shows, like I said, Monday, Wednesday, and Friday now. For some, it's, maybe I'm trying not to flood my, the market with my face, and not trying to flood the YouTube with my face here too much. But anyway, everything in moderation, right? Now, hey everybody who's tuning in right now. Hopefully you're enjoying the session. By the way, I need to very quickly put this good morning to everyone in the chat room here. Good morning to everyone who's tuning in. So yes, hey, lifeflation sucks. What do you mean by lifeflation? What do you mean inflation, lifeflation? What do you mean by that? Let me know. Right. Okay, ladies and gentlemen. Also, just before we jump into the charts, the usual mentioning of our mentioning our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Sorry, I cannot stop laughing here, giggling from Paul. Yeah, look, I mean, with lives every day, I think that there will be way too much of me, and yes, I think that these updates, let's say these sessions for like Monday, Wednesday, and Friday, I think that they're quite okay. But fewer lives nowadays. Look, I will say it this way: it's a lot of effort, and sometimes not a lot of people tune in because, again, maybe for some of them is a little bit too long. But look, I'm trying to deliver different scenarios, different videos, short and long, and just to kind of for all the viewership. But in general, I do love running lives. In general, I do like that because it kind of gives that a little bit of an interaction between people, and I think that's great. So this is something that we're sometimes losing, and this interaction. So lives can help us bring back that to the table. Look, ladies and gentlemen, let's jump into the charts now. The market is a little bit in like limbo moment, in my opinion, somewhat of a limbo. Depends on the market, of course, as well. And basically, what I'm looking at here is Nikkei 225. So yes, after we saw that decline, after we saw that I was on Twitch, no, I didn't try that Twitch. No. It's like I need to maybe that one, maybe one day, but at the moment, yeah, it's not something that I've tried. Maybe. Look, Paul. That could be an option, of course. Look, ladies and gentlemen. Let me just, like I said, pick up on this. And basically, the Nikkei 225 here, we had a nice decline. We had like the decline that happened. That was on Friday, if I'm not mistaken. Yep. And basically, that was like that fear kicked in, where markets were fearful because of that 25% tariff, like on all those countries from, imposed by the US and in general. So yeah, this whole madness, honestly, like, it's sometimes even already like you're tired of talking about it, because it's so like every day. And there's like fear of this, fear of that, and like it seems like everybody's really trying hard to bring the market down. But look, for now, let's put it this way. If we're looking at Nikkei specifically, then Nikkei dropped nicely. We reached my target. I said I'm going to aim for that 35,111 zone. Perfect match here. That's the lowest point of September of 2024. Basically, I said that if we do drop below the 37,269.70 zone here, I will go towards this area. Boom. Now, what's next? Next, basically, is this. So you're now looking at this area, which I think that it's worth mentioning, and basically this 35,111 is something to be considered. So if we do drop below this, this will confirm a forthcoming lower low, and so on and so on. But look, the market right now is waiting for Trump decision, and I'll get to the U.S. indices in a bit, but hey, everybody's waiting for Trump decision, and well, what can I say? For now, it has been, there was an update that he's going to do the 20% flat across all, just a general flat 20%, and yeah, okay. Okay, but I think that they came back with some like thoughts, actually maybe like 25 is too much, and now they're gonna do like just a flat duty on 20%, like basically like the VAT tax, right, in Europe. Okay, we'll see how it goes, but again, for now, everybody, the market is waiting to see like what kind of reaction we're going to get. And the same story with Nikkei. Nikkei at the moment doesn't have much, let's say, from the economic side. We don't really have much data. Only the household spending that's coming out on Friday, something to keep an eye on, because at the moment the expectation is for the year-on-year number to decline, I would say, quite significantly. So let's see what's going to happen there. But mainly it's the NFPs as well in terms of economic data. I mean, it's the NFPs that are going to be also carefully monitored. So at the moment, I think that for Nikkei here, not that much of like let's say the Japanese data that is driving the index, is more like these other political and geopolitical tensions, these tariffs, those are the ones that are driving. And also, as I understood, Trump is planning to impose 25% on cars important. Let me just double check that info. Yep, Trump will impose 25% for tariffs on all foreign made vehicles. Right, okay, and that's coming on not today, tomorrow. And okay, well, we understand that Japan does does export. A few Japanese manufacturers do export their cars into the U.S. So, but we do understand that there are some plants that are made. And there are plants, some plants in Mexico, which so, but still they would fall under the same, right? I mean, because Mexico goods would also fall under the tariff. So anyway, if those manufacturers would be making cars in the U.S., some of them do, I think. But I think not on all models. That's the thing. That's the most important. So some models are still made, in Japan, and that's what the Japanese market is worried about. And look, I mean, for now, I mean, if when those come in, I think that there could be some weakness unless some sort of like positivity kicks in, and we see the U.S. markets like rebounding strongly, and this is where it could help out Nikkei 225. Right now, let's jump into okay. Look, with China, there is a little bit of an issue here. We kind of no longer offer it, but you know what? I will still pick up on China 50 because I think it's a valuable market to keep an eye on. And the China 50 index here, look, I talked about this a while ago. So previously I had my scenarios here, everything, but well, okay, we decided to, apparently the company decided to discontinue, so I have to adjust. And in a way, yeah. So what I'm looking at here, looking at China A50 index, so it's the same basically. So look, at the moment, I will try to provide you with the same kind of analysis that I did previously. So let me just adjust my colors here very quickly. So this there are a few upside lines here from the technical perspective, and of course, some of these lines are getting broken. Like for example, this one, I talked about this one a while ago, and yes, we are currently clearing it. So if you're looking for some lower levels, then in a way there is a chance for this one to drift further south. And looking at these EMAs here, look, I think that, let's put it this way. I think that the EMAs might not be the most important thing here, because I think that the EMA, sorry, not the EMAs, the trend lines might not be the most important thing here, but the EMAs could be though. So that, there we go, the other way around. Sorry, I was thinking about something else here and totally lost it. But look, we fell below the 50-day EMA. That's fine. We fell below this upside line, but again, this upside line is a very tentative one, so maybe it can be drawn this way or that way. So that's what I'm saying. So it's really subjective. So you know what? Let's actually get rid of it, and let's get rid of this. And instead of having these trend lines, I think let's have some support and resistance levels, and I think that those could bring a little bit, a bit more value into this. So I'm marking the key areas of support, but I have to say that before these levels, of course, we need to consider the 100 and the 200-day EMAs. If we are looking at some higher levels, then certainly there are a few obstacles to overcome. I will start probably looking at some higher levels if we do start pushing back above the 13,550 zone, somewhere there, and then yeah, we'll go from there. So and then we'll go for the 13,800 here, which is the highest point of March, and so on basically. So there are, like I said, good targets above, but let's face it, we need some clearances, and at the moment the upside scenario is not the most popular one. Again, the way China could react to tariffs, look, I think that, let's put it this way, they're trying, I don't think that it's going to be like a huge reaction. I don't think it's going to be like, there will be maybe some downside, but the way that the Chinese index could react here, I think, is mainly due to the internal problems. Let's say if there's a problem there's a problem with the housing, or let's say we don't get much government support, and that's where the issues could arise. But in terms of tariffs, it's like, what's new? That's why, I mean, yes, I mean, I think that U.S. is getting harmed more rather than than China. But of course, China is losing. Well, it's not losing actually. It's going to remain the market will stay. It's not that they're kicked out. No, it's just that yes, the goods are going to be more expensive. But the thing is that the manufacturer, the sellers, everybody's going to be ours going to be more, like I said, everybody's going to be passing on these increased costs to the consumer. So the consumer will have to pay more. So I think that yes, the problem, the consumer is the U.S. consumer, and even with the, let's say, 20% tariff, still, I think that people will continue buying, because there will be, let's say, you're buying something, it was previously $10, now it's going to be $12, right? still, I think it's going to be cheaper rather than than in the U.S. and something which is the same produced in the U.S. So that's why the biggest problem from all that will be a possibility for inflation, like U.S. inflation, to be increased. And this is where it may if inflation starts picking up, that's where the Fed could start kicking in. And I think that this is where we could start seeing issues. But let me just jump with that one into the U.S. indices for that. So this is where, like I said, with the indices, yes, they have rebounded, but I think that this is where the problem is that it's a temporary. It could be right now just a temporary rebound. So I think that we're still not done with the downside. If as long as we stay below the 200-day EMA here on the Dow, I think that we're not really done with the downside. Now, the only thing is the way I'm going to look at the downside right now is I'm going to look at it from this perspective. I'm going to look at it this way. So if we're currently, it seems like we're currently coiling up. This level no longer needed. This highlighted area, we can actually, you reuse it here, and I think it'll be good. But what we're seeing right now is a bit of a coiling up moment, and at the moment we're seeing that yes, we're waiting for the decision, the official one, and the markets are not trying to make any moves, although some might say, but hey, but it's like already predetermined, like why we're not moving to the downside, why instead like we're pushing back up. Well, I'll put it this way, that previously everybody was expecting a 25%. Yesterday we came out, we see that there are reports coming out saying, oh, it's going to be like a blanket 20%. So you see, the thing is, an info changes, and with this administration, everything is like kind of last minute, and there's no clarity. So prepare yourself for surprises, and that's why the market is also preparing themselves for a surprise. So if it's going to happen, or maybe if there's going to say we're going to give more time for this to reconsider, and if they're going to say something like this, then yes, we'll have a fantastic rebound, most likely, and we could see a push higher. But if they will say, what, no, we're imposing this. However, then or not, however, sorry, however, I'll get to however. So if we're imposing this, and then yes, we could see a drift lower. Now, however, if they impose the tariffs and the blanket tariffs, and we see that that there are some exclusions happening. For example, they say, oh, there's an exclusion for this, and we want to see like how many exclusions there are going to be. Like, I mean, what's going to be the how many, like in general, the quantity of those exclusions, if there will be any. If there is a significant amount of exclusions, then maybe the market will say, you know what, actually, those tariffs are just like a show a little bit. Maybe it's we're more like, maybe they're not going to have that much effect, and maybe this is where the point where the stock market could recover. So keep your eyes on that as well. Let's see, let's see those reports, and let's see what's going to happen from here. For now, I'm waiting. I'm playing the waiting game, and I'm trying to see which way we're gonna rebound here. Or rebound, or sorry, not rebound, but which way we're going to break out. A rebound would be to the upside. The S&P 500, similar story. We held nicely above that 23.6, so the same analysis is valid. I'm still keeping an eye on this area, this 5,500 zone. Nice good clearance of that could attract a few more sellers into the game. For the upside, well, I said to you before that for the upside, we would prefer to, or I would prefer to wait for a push maybe back above the 200-day EMA. If we can get that move, I will consider a move towards my EMAs. Let's jump into NASDAQ 100. So NASDAQ held beautifully above that 19,100 zone. I talked about it, and I talked about it on Monday, and I said to you, look, if we do stay below it, yes, there is a good chance for this one to drift further south, and we could maybe end up, traveling towards this area here. Let me just let's make the arrow smaller. Maybe we could, travel to this 18,306 zone, or maybe we could end up, traveling to this 17,638 and a little bit below that. So But right now we're getting a rebound, and the question is, I mean, is this going to be sustainable? But basically, the same analysis applies on Nasdaq as well. We are, keeping an eye on the events which are going to be coming out from the U.S. So for the upside, look, preferably, I would like to see a push at least back above the 200-day EMA. That's what I would like to do here. And yes, in a way, I mean, I'm still not excluding the upside scenario here. Maybe we could see a little bit of a push higher, but maybe this downside line could do the trick here and, could hold the index from moving higher. Let's have a look at the dollar index very quickly. Oh, by the way, you know what? Okay, I'll look at the dollar index, but then I want to look at the Russell 2000 as well. Let's see what's happening there. Dollar is stuck, and you know what I really want to do here? I want to remove all the drawings and start fresh. I think that this is quite logical, and given the situation, yes, I mean, I think this is, in everybody's mind. So look, we have a downside line taken from the highest point of February. That's fine. We also have a key area of support, which is around here, around the 102.80 zone. Okay, that's absolutely fine. So basically, if you want to look at some lower levels, pretty straightforward. You need to wait for a drop below this territory. Below that 102.83 zone. Apart from the tariffs, ladies and gentlemen, you have to keep an eye on today on the ADP number. Now, that one's like the job number. So ADP employment change, that one's expected to come out on the lower side. On the higher side. Yep, I do apologize for that. Is that correct? Yeah. So that one's expected. Let me just double check something because I thought that I saw another number. Let's have a look. Where's that economic calendar? Let me just double check that economic calendar for today. Yeah. Okay. No, that's absolutely fine. We are expecting a little bit of an increase, but okay, the number is expected to come out on well, here it says 120k, some other sources say 118. Okay, well, it's roughly around the same area, but the most important thing here is that if it actually comes out higher. Now, I'm not going to be surprised if the number comes out higher than the previous, but still below the forecast. If that's the case, maybe that could be enough for the US dollar to push higher. But again, we have some strong obstacles here on the way to the upside. We have this downside line. I'm just going to pour myself a little bit of tea because I think my throat is a little bit suffering today because there is a little bit of bad air quality, I think, in my opinion. And yeah. So anyway, look, we're at the moment, like I said, at this point, looking at the dollar, I'm not touching it because again, it's really difficult and it's really I don't like difficult. I mean, okay, I don't like to when it's way too difficult, and I think nobody does. But not all my boxes are ticked here. Let's put it this way: for me to examine the upside on this one, I need at least a break above this downside line. But even then, we have a problem with the EMAs. So we're keeping an eye on this. For the downside, a drop below the 102.83 territory here, I think that this is what is needed. So all this area could be just flat for me, and I'm just observing the price action. So now then, let's jump into Russell 2000 very quickly. So this one, look, I talked about it, and so far, I mean, it's similar kind of to NASDAQ, but it's more devastating in my opinion. But look, in general, keeping an eye on that 2000 zone, that 1985, a nice good clearance of that area. Well, guess what? A forthcoming lower low will be confirmed. Let's jump into Europe. Let's have a look what's happening here. So yesterday we got like some positivity, right? Yesterday we got some positivity just because the tariffs were changed, in my opinion, so that they wasn't 25, now it's going to be like 20%, right? So there's like a little bit of improvement But still, the market, look, I mean, it's not buying it. It's still stuck here. This upside line needs to go, no longer needed. But the fact is that, am I still examining the upside scenario? Yes, I am. Yes, I am, because we're still above this upside support line taken from the low of the 19th of November. Am I still looking at some lower levels as well? Yes, I am, but only from the break of this 22,000 zone, this 21,972 territory. I think that's the best option here, because that's the lowest point of March. If we can clear the lowest point of March, I'm leaning towards the downside. Very quickly on the FTSE 100. Again, stuck oscillating around its 50-day EMA, shown as the green line, so not much excitement right there. We're waiting to see what's going to happen with this downside line. If we can break that, great. I will go lower with the I'll go higher with the lower side. I will, well, this in a way I would say kind of worked out. I said to you before that if we do drop below the 50-day EMA, my next target is the 100-day EMA. We came close. It's almost that, test. So that's why I would say at this point, again, I'm looking at some lower levels if we continue to trade below the 50-day EMA. Let's jump into, let's jump into the Forex world. Let's have a look what's happening here. AUDUSD, it's a mess. And I think what's needed here is a removal of all the drawings. So it's a mess a little bit here. We're stuck below the 50-day EMA. As long as we stay below the 50-day EMA, I'm still leaning towards the downside. What I need here for the upside, and I think you might agree here, is this break of this downside line taken from the high of the 21st of February. But some of you might say, hey, Darius, what about a triangle pattern here? And I would say you're not going to be wrong. In a way, it's like we're seeing like a little bit of a squeeze happening. So in other words, if you're looking for something a little bit more reassuring, then wait for a breakthrough one of the sides of this triangle pattern. I think that this could be a slightly safer option. AUDJPY, this one is still stuck because, again, this is our risk on, risk off monitor, and we don't know right now what's going to happen. But at the moment, what we're seeing here is that this downside line continues to provide resistance. So as long as we stay below this downside line, there is still a good chance for this one to drift lower. We need a clearance of this downside line in order to go higher. NZD, USD, again, similar story. Let's remove all the drawings, and I think that this one might not be the most coiling moment here. I think that this is on the contrary. It's kind of, it really maybe can be looked at this way. It's a little bit difficult. Yes, it is still forming these higher lows, but it's struggling with a higher high. So in general, I think I'm going to take a very, very conservative approach here on New Zealand dollar, on NZD USD against USD, is I'm going to wait for a pop above the 0.5830 zone before getting comfortable with some higher areas. Now, US dollar against the Japanese yen. Let me have a look at this one. Right. Okay. So we are still holding above this downside, this broken downside line, and this is where my theory of retesting the trend lines from the broken trend lines from the other side, and this is where it's kind of working out nicely. And if you're looking for some higher levels, I would say just kind of wait for a break above the 151.20 zone, because maybe at the same time we could clear all the EMAs here on our daily chart. For the downside, I'm still going to stick to my conservative approach here, and I'm going to wait for a drop below the 147.20 zone here, and then I'll go from there. US dollar against the Canadian dollar. Okay, it's a little bit of a roller coaster ride here. This downside line did not work. It's fine. But what is working for now is this area of support, this 1.4245. And if we clear that one, we also clear the 100-day EMA shown as the blue line here. The next target then is the 200-day EMA. So that's what I'm going to stick to for now. And hey, let's see what's going to happen at this point here. But I am leaning a little bit more, like I said, yes, towards the downside on this one because, again, with the US dollar, it's unclear what's going to happen. I mean, let's see what kind of effect we'll get from the announcement of the tariffs and or not effect, but the reaction in the market, the initial reaction in the US dollar. And also, of course, we're all watching the NFPs on Friday. So I'll tune in on Friday to my webinar, to my live webinar. We'll discuss the NFPs. Now, USD CHF. Look, we are breaking this downside line. That's absolutely fine. It's time to get rid of it. It didn't really work as planned, but this is why you do these things. So still, my upside scenario idea is kind of still working out because my preference is on a break above the 0.8870 zone, because at the same time we'll clear the 200-day EMA. Yes, we'll have other EMAs to deal with, but I think that this is something that maybe could be temporary and we could see a pop higher. But in general, if this is more of a range situation right now, if this is more of a box that where we're stuck, so we look at the prevailing trend. The prevailing trend was to the downside. According to all the TIA rules, such patterns tend to break to the downside. So this could be like just a little temporary pause before another possible leg of selling. And well, this is where, like I said, this is where we'll wait for. And for now, we will wait for this. We'll wait for that clearance, and then we'll go from there. Euro USD, yeah, and also like not the most exciting thing here. My preference here for the upside is from this 1.0950 territory. I know a lot of territory to miss out on, but if you're feeling a little bit more adventurous, you can keep an eye on the 1.0849 zone here. But look, again, it could travel a little bit higher, fail to reach this area, and then reverse back down. So that's why if we do clear the 1.0950, we'll confirm a forthcoming higher high, and I think this could be a little bit more interesting. But at this point, look, if you are feeling comfortable with this, with 1.0849, you can do whatever you want in a way, but just please do promise me you're not going to risk all what you have in, and you'll have a very, good tight stop loss just in case it reverses against you. Because again, it's like I said, it's still a little bit of a gamble here. I mean, it could travel a little bit higher. Maybe it's going to form something like a little rising wedge here, and then it's going to drop lower. So again, these issues. But you see, my downside scenario, I'm not even comfortable with the downside scenario on this one because I prefer to see a drop below the 1.0733, 32 zone, somewhere around there. Euro JPY, similarly with the USDJPY, still kind of waiting here. We're getting into a bit of a slowdown here, but we need some sort of a catalyst to drive this one, so we're waiting for this one to make a move. Oh, by the way, it just reminded me, Euro Aussie. Okay, look, I totally slipped out of my head. This one, where is that? Australia. There we go. Where's Australia? There we go. Australia, commodity prices, retail sales. No, I'm not looking for that one. Where's the interest rate announcement? Cannot see it. This is wait, that's March. There we go. Retail interest rate decision. There we go. So why? Wait, I need to update this one. Right, we need to refresh this one. So Australia interest rate decision 4.1. So we didn't see really like anything major here. I mean, look, it's fine, but the Australian dollar did strengthen a little bit. Let me just put the AUDUSD. I totally forgot honestly about this one, but you can see that yes, we had nice little rebound, and that's great. So in a way, I think that the problem here is that the market, maybe the bank is not expected to to go for to go for more cuts, and that's where this positivity is kicking in. Let me just update myself very quickly with the info here. So yes, 4.1. So yes, okay. Meeting in line with expectations, the board noted that monetary policy is well placed to respond to international developments if they were to have material implications for Australia. The central bank has expressed growing confidence that inflation is moving sustainably towards the midpoint. Blah blah blah. As higher interest rates have helped bring aggregate demand to supply. Okay, also uncertain economic. Okay, so right. In general, I would say the way the wording goes is it seems like they're more actually in favor of cutting because again inflation is maintained. There will be they will be ready to jump in if an economic outlook kind of becomes worse. So yeah, I mean the lower number is the more favorable one, but again the market somehow doesn't see that way, and we are seeing a nice little rebound here. And maybe the fact that just the dollar is not the strongest one right now, and we're seeing maybe because like I said we're also seeing um, the interest rate remaining like not dropping. There is, like I said, there is this hope that maybe that maybe interest rates could go higher because again, this is what the market is worried right now about, that if these tariffs start kicking in, it's going to have like it will have these negative implications on a lot of countries, and not only in the U.S. but also other countries, and we could see like some inflationary problems in there, and this is where the bank would have to go and kind of hike rates. But again, then the question is, are they going to actually hike rates, or are they actually going to stay go for a cut instead in order to boost economic activity? So that's where the like a lot of ifs are happening at this point. So what we do is we go with the flow, we go with the situation, with what's happening right now. Look, I mean, this worked out beautifully. This falling wedge idea worked out nicely. We traveled higher, we tested. It doesn't look, the rising, the falling wedges don't really mean that if it's a falling wedge, for example, we're gonna go up and away here. No, it's the breakout. That's what we're looking at. So it broke out to the upside. Did it confirm? Yes, it was a good confirmation here. It was a good result here. Now what's next? Next, we get rid of everything, and we start fresh, and we look at what's happening here. We look at this 1.7050 zone, and if this gets broken, I would say I'm leaning towards the downside here, towards the 50-day EMA, or maybe below that. For the upside, what I would like to see here is a break of this little short-term tentative downside resistance line taken from the high of the 11th of March. Now let's jump into GBP very quickly. GBP, yeah, we're stuck. We're waiting for some dollar action here. Not much stuff coming out from UK at the moment. So yes, we're waiting for the NFPs. We're waiting for the tariffs. We're waiting for just other data. We have. Today, we have the ADP. Tomorrow, we have the JOLTS, if I'm not mistaken. Let me just double check very quickly. Of course, we'll have the initial and continuous jobless claims, but are we not having JOLTS? Right. Was that Tuesday? Let me just double check. The interest rate decision, the U.S. No, we had ISM manufacturing. Right, okay. Also, ISM is another issue. ISM manufacturing yesterday, honestly, like this one came out. Where's that number? JOLTS, yesterday came out, JOLTS. Right, I totally forgot. And the ISM manufacturing PMI came out at 49. Right, this is a problem. This is where it's kind of worrying the market. So this is a first indication that there is a slowdown in manufacturing. So it dropped into contraction territory. So the forecast was already for a number to drop into contraction territory, but it fell like below even the forecast, and it's now in this contraction territory. Last time it was back in January, then December. Like we were almost getting back into this in February and March, and now look. I mean, in April we're climbing. We're dropping back into that contraction territory. So this is also what's worrying the market a little bit. But again, let's see what's going to happen with the US dollar. For now, we are keeping an eye on the ADP. Let me just quickly remind myself, the JOLTS job opening number came out on the lower side. Okay, so I mean, not okay, but now all eyes are going to be on the ADP, which is expected, to come out on the higher side. But as I said to you before, that I am kind of aiming for the number to be somewhere in the middle between the Oh, look, I mean, it just updated. I mean, I have like the 105. It's now dropping. Look, on my words, it's now dropping. You saw the number 120 before. Let me just check another source here because again, it's really interesting to see how this is getting updated as we speak. Because again, like I said, on this right now, you saw that it was 120, and now we are getting to where's that Wednesday ADP employment change, right? Okay, so now the forecast is even dropping to 60. Okay, so interesting, very very interesting. So we have a bit of a problem here, I would say. We have a mix, very big mix, very big spread. So yes, the consensus right now is the 105, but then there's a forecast of a lower number. Okay, look, I will say it this way. If it drops below, if it comes out below the forecast, but comes out higher than the previous, I really doubt that this would be seen something of a positive moment here. Paul, like Trump tries to manipulate data in his favor, but it's not only him. Honestly, it's really not the previous. It's like every administration, every country manipulates. It's like you look at the numbers. You have we as retail traders. We look at the numbers and we see that's one number here, but actually everything is already known. It's just these announcements are just for us, I would say. But okay, what can we do? We cannot really do much. We have to kind of play the game. But the thing is that I would say everybody should not be surprised when you see certain numbers coming out in one way or another way. It's always like a political game, and it's not like I said, it's not only him. They all do it. They all do it. Doesn't matter where you're from, So it's everywhere. The data is everywhere manipulated in favor of certain political parties and political agendas. And in this case, ADP. Okay, look, maybe the ADP is not the most exciting number, but it's still looked at. But the more interesting one is coming out, of course, on Friday, the NFP, non-farm payroll number, which at the moment is expected to come out on the lower side as well. So in general, if ADP comes out lower, if ADP comes out, for example, at 60, okay, that's going to be quite interesting. If not NFP comes out on the lower side as well, that's where, like I said, I think that this is where this is what we're waiting for. I think this is where we want to see what's going to happen with ADP. Maybe they're thinking that if there's going to be, like, say, all the job numbers in the U.S. are going to be on the lower side this week, and also we're going to get like the announcement of tariffs, this might bring the stock market kind of lower, and that's where, like I said, the issue arises. So we'll see, of course. We'll see how it plays out. Paul, I did not see how many data getting a revision like I've seen this year. I've watched market data for about 5 months, but this year almost everything gets a revision in the same day or day. No, look, the data gets the previous. This is you always, like, for example, when you're looking at NFPs, the revised, it always gets revised. The previous number, well, let me show you. Where's that Friday, and where's that NFP, non-farm payroll? There we go. So in general, look, this right now, the the actual number that came out is this 151. That was the the announcement here. Then it doesn't. Okay, TradingView doesn't show this. Where can I think I'm gonna look at the other source very quickly. Where's my Friday? Where's my Friday data? There we go. Non-farm payrolls. So basically, the problem that I have is that, so you look at no, not this way. You look at, for example, the previous number was at at 151, right? And where is it showing here? The 151. But when it comes out, it most of the time gets updated. So let's say when, for example, the reading before that was that when I think the February, Yeah, in February, when we got the number in February, for example, for the January numbers, the actual figure came out at 143. The we looked at we jumped into March. It then gets revised when the number comes out in March. The previous data gets revised, and it revised to 125k. So from 143, it got revised to 100. But that happens all the time, to be honest. Like right now, we're seeing that this prior number is sitting at 151. I'm gonna, like I said, it's gonna be very interesting to see into which direction this is gonna get revised. If, let's say, the number comes out, the NFP, you're looking at NFP, and it comes out on at around 128k, something like that. If it comes out somewhere there, then you quickly look at the the revision, what's happening here. If it gets revised to a crazy number, like a huge drop or something like that, then there's a question like how the hell it got it got that number last time. So that's the problem sometimes. So we look at all this. We don't look at only the actual number. We also look at the prior figure, the revision of the prior figure, and it gets revised all the time. So let me just quickly jump into GBPCAD. Okay, we're drifting back into this falling channel. No longer needed. So yeah, I'm not going to really talk much about this, because again, what I would prefer here is to wait for a drop below this territory for the downside, 1.8345, and for the upside, 1.8610, and then we'll go from there. Let's jump into gold. Let's jump into gold before I run out of time, and look at this animal. Honestly, yesterday, look at this. April Fool's Day, 3,149 almost. Wow. I mean, wow. And this is like I said, this is quite crazy. And I mean, it's time for a bit of a correction. But again, the question is, are we going to get that right now? Because look, the weekly candle, actually, you know what? The monthly candle, that's what I'm looking at here. That's what I'm looking at right now, and I want to see what's gonna, how we're gonna play this game. At the moment, it is just one-way traffic. Of course, everybody's like crying for that little correction back down, but hey, I should tell you that don't rush, because again, well, because it's gold. Gold has been picking up pace, but at this, look, as I said yesterday, here in one of my videos on TradingView on our page, that the more you rise, the harder you fall. Look, it's yes, gold. I had a viewer who commented like gold has always been bullish. Yes, Paul, the fool's gold. Yeah, yes, gold has always been bullish. I'm not saying anything, but the thing is that, was it not falling before? Yes, it has been falling. So whenever it kind of rallies a lot, this is where you then, like for example, you have these strong corrections. So I would say, when I'm talking about falling, I don't mean that it's going to like collapse and it's not going to be valuable anymore. No, it's just that at some point it will have to correct significantly in order to be quite attractive. At this point, what we're seeing here is way too parabolic. So you need like an economic recession in a way to kind of correct this. And somebody might say, but hey, Darius, but isn't the problem that during recessions, these commodities do gain? They do, but the problem is that I would like to buy gold, not just bet on price of gold. Yeah, I mean, Paul, you can sure, you can always do that, and I think that this is, just kind of keep it safe somewhere, and what can I say? I can say it this way, that if you're looking at gold, for example, and when I'm saying that the market kind of, when the market sells off, the gold rallies and everything, that is true. But in this case, for example, it seems like that everybody's buying now because everybody believes that the stock market could sell off. So if the stock market starts selling off, maybe somebody will say, but actually, you know what, this is where people don't have for what to the money to buy gold, to buy electronics, to buy just in general, like what you normally were buying, like gadgets and all that stuff, which do use Would you use gold? Yes, countries are buying gold to preserve themselves, but the thing is, at the same time, they can sell it in order when the times go rough. They can sell gold at these elevated prices and get have the money and throw it into the economy. So that's what I'm saying. So that's where the selling might start happen when when the stock market starts falling, crashing, and everything. And another thing is that this is where actually an opportunity arises. When the stock market starts dropping heavily, people will start buying stocks again, and that's what I'm saying. So that's where the money could shift from gold, and this is why gold could start. We could have that period where the stock market starts crashing and gold starts falling as well, and we could see like or maybe gold actually could move a little bit higher because of the initial hype, but then it could start dropping, and basically the money would start pouring into the stock market again, depending on how the stock market performs. But yep, everybody could start buying there and jumping into stocks again, and gold could start then falling back down. So again, like I said, this is just an idea. Let's see how this is going to play out, of course, but at the moment, yep, gold is tricky. Look at the looking at the daily chart. I talked about previously about this 3085 zone, but now I'm going to talk about yesterday's low, which is the current lowest point of April, and that's around this 3100 zone. A drop below the 3100 may attract a few more sellers into the game here. We could see maybe a bit of a correction to the downside. In terms of the upside, well, of course, I'm keeping an eye on the all-time high, but I'm also, from the very short-term perspective, I'm keeping an eye on March, on the highest point of March, near the 3,128. Yes, we overshot that level, this level today, but again, we are struggling to remain above it, and that's what we struggled with yesterday. We struggled to stay above the highest point of March. And that's where, for me, this 3,128 becomes quite an important area to keep an eye on. So if we continue to trade below it, I am, like I said, I'm just carefully leaning maybe for a bit of a correction down. Let's see. Silver. Silver is a little bit more bearish and more pessimistic, but again, still holding above holding above this upside line right here, taken from the lowest point of the December of is that, sorry, just a second, this is the lowest point of December, low 28,727, 28, yeah, okay, sorry, that's the low of the 31st of December. So this upside line is still maybe a good one to watch, and it coincides nicely with my 100-day EMA, and then we'll go from there. So long story short, if you're looking for some lower levels on silver, I would say just wait maybe for a drop below this territory, below this 33.42 zone. Let's have a look at oil. And look, okay, there are some political games happening right now, some possible tariffs and duties on Russian oil and Saudi oil and stuff like that, and also OPEC plus countries decided to increase production. So yes, I mean, we're seeing this nice move to the upside. I talked about this previously. I said that if we do pop above the 50-day EMA, my next target is the 100 and then the 200-day EMA. In a way, tick. Anyway, all that has been done, so now I'm just looking at the 200-day EMA. A nice good pop above it may attract a few more buyers into the game. And for the downside, I would prefer to wait for a drop below the 50-day EMA, here shown as the green line, and then we could go from there. Natural gas, very quickly. Roller coaster ride. I have to remove everything, and basically we're just I'll approach this in a simple fashion. As long as we stay above all my EMAs, I'm gonna continue targeting the upside here. But if we somehow start falling below the 50-day EMA, I'm going to start leaning towards the downside. Coffee, very quickly. Coffee, okay, the 50-day EMA continues to provide good support. I talked about it, and hey, let's have a look. If we can drop below the 50-day EMA, I'm going to lean a little bit more towards the downside. But at the moment, we're getting a rebound. However, I'm not really getting comfortable with the upside yet, because I would prefer to wait for a push above the 411 zone for now. Let's have a look at cotton, my beloved cotton. There we go. There's a beautiful pop here. I talked about cotton previously in one of my videos here. I can show you this. You can Basically, this is what I've put out there, and it's working like a charm. We're breaking above the 67, 66 territory right here, so that's great. And yeah, the question is now, I mean, this looks like, potential, and we had a breakout. So now the question is, can we remain above that 100-day EMA? If we can, my next target is the 200-day EMA, and then we'll go from there. Let's have a look at the crypto world, ladies and gentlemen. Bitcoin rebounding nicely from that 200-day EMA, so staying afloat. But I'm not saying, that I'm getting bullish. No, no, no. I'm actually remaining still cautiously bearish, because again, if we do, stay below this downside line, I'm leaning towards the downside. But again, I prefer to wait for a drop below the 200-day EMA. If we're looking at some higher levels, then we'll wait for a break of this downside line and all the EMAs. And if we can get that move, and if we can get that push above the psychological 90,000 zone, then yes, great. I will go to the upside. Bitcoin Cash, very quickly, managed to pull itself back above the $300 mark. So okay, that's maybe a good sign, but still still worried a little bit. So I would say this way: if we do somehow push back into the 320 territory, I'll consider maybe a bit of a move to the upside. Ethereum is stuck. I threw out this little idea on Ethereum yesterday, so you can check it out here on TradingView. And if we do drop below the 1,754.55 zone, I'm leaning towards the downside, because the forthcoming lower low will be confirmed. Ripple trying to stay afloat as well. This is working out okay. We're still above this upside line, but below this downside line. So basically we're coiling up here. And what can I say? For now it's it's a tricky moment here. If we do clear this lower side of the triangle, then yes, of course, this is where I'm going to get myself a little bit excited more about the downside. But again, I'm not saying anything. We could still end up, moving sideways here within this formation. There can we watch Trump coin chart just for fun. Trump coin. Trump coin, Trump USD. So let's pick the platform here. Okay, no harm about Binance, so maybe this one. I mean, what else to say here? It was a nice, rally here when it was about, before the inauguration, and then it kind of, it kind of started collapsing during the inauguration. Yes. Does it still exist? Well, I mean, apparently, what do we have here? Yeah, it's still trading. I mean, it's still trading. But look, I would say this way, that this coin is purely for, like, trying to maybe hold it and hope that something that that Trump will say, and that's what's going to drive the market here to the upside. So again, it's really purely speculative, and I wouldn't say like this is something to like that would catch my attention here. Again, I might be wrong. Maybe I'm not seeing something here. Maybe there's a bigger fundamental behind it. But at this point, I'm approaching this. I'm trying to approach this like as carefully as possible. And you can gamble on it if you wish, but again, you have to be willing to lose the money in case it goes, gets delisted or something like that. So just kind of be careful with that, I would say. So yes, I mean, normally, I normally don't say like, go gamble. No, but it's like everybody does what they want to do, but you just have to do it, protect yourself. Don't you wouldn't put your life savings into this, right? Hoping that one day it will, shoot up. Yeah, for sure. For example, if it shoots up, congratulations, you're in the, you're doing great. But if it doesn't, then, it's a problem. Look, there's no point. I mean, no, there are coins which are purely for speculation in terms of like what will somebody say or what some sort of organization will do, right? I mean, these are coins for specifically for that. It's not like actually going to be like Ripple or Solana or or Polkadot or like these Litecoin where they do have an infrastructure behind them. So that's why it's a little bit tricky. see. Yeah, so it's like I said, it's really depends. Now let's go back to a little bit slightly better coins here, like Litecoin, and this one is actually dropping below the 83 territory here, and this is where it is concerning me a little bit. It is concerning me a little bit, and I want to see if it's going to hold above this 79.82 zone. If it does, okay, maybe there could be a little bit of a chance here for the bulls, but if it doesn't, I mean, this is opening the door to some much lower levels, I would say. So yeah, keep your eyes on that into the 70s basically. Dogecoin, similar story. I mean, not really. There's not much excitement with the Dogecoin right now because again, Tesla is on fire to the downside actually, and let's actually have a look at what's happening here with Tesla. Okay, yeah, it did recover a little bit, but there's not much, truth behind it, if I can say it this way. And there's a coin anyway. My coin, that's on it first, just to be sure. My coin, no. It's I still have my, I want to keep my reputation intact a little bit, So thank you very much, Paul. But yeah, I mean, I think it would be fun at the end of my life when I really don't care, maybe, but then at this point I still do care. And yes, no. Yes, no. Thank you very much, but no. Anyway, Polkadot's still stuck here, and I'm not saying that I'm bearish nor I'm bullish. No, I'm waiting for this one to get out of the box, and then maybe I can do something about it. So, ladies and gentlemen, I'll have to wrap it up here. Thank you very much, Paul. As always, thank you very much for your conversation. I really appreciate that because again, I just want to point out to everybody who's watching this right now. I mean, this is the purpose of these shows, so that you would be asking questions, any type of questions, and if I can answer, I keep on saying, if I can answer, I'll answer. If I don't know how to answer, I'm not going to answer. I'll say I don't know how to answer. So that's one thing. So that's one thing. So. Just like I said, this is the point of these shows and these live shows, and hopefully you enjoyed those. Thank you very much, everybody. And like I said, be careful as always. We have some data coming out today. We have some tariff talks. We have the Liberation Day today, so just be careful with that. Don't get too liberated. Don't get liberated. Yep, I will see you on Friday as always. As not as always, 7 o'clock GMT time now, because again, we turned the clocks and everything, but 7 o'clock GMT time. Thank you very much, everybody who has been watching. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I shall see you on Friday. Bye-bye.